morning, good afternoon, good evening. Thank you for sparing this hour to spend with us with the Global Indian Steering Group of Grant Thornton to talk about something that's very topical and relevant in today's times, the UAE Tax Residency uh, topic. Um, uh, Let me quickly start by introducing the team with me here, who's part of our global steering group. Well, I'm, myself. My name is Akshay Bhalla. I'm the head of India Global for Grant Thornton, and I have a number of partners who have joined me, who will be presenting, answering questions, and also being available to you now and hereafter for any queries that you may have with respect to their jurisdictions as such. So let me start by introducing Anuj Kapoor. He's the head of M&A and International Tax at Grant Thornton, UAE. He will be leading the presentation today, given that this is a topic which emanates from his part of the world. We also have Pallavi Joshi Bakru, who many of you know. She's dialing in from Delhi. She's the partner and head of private client services for Grant Thornton Bharat, India. We have Nick Parkinson, who some of you will recollect from our last webinar, where we presented the, again, very popular topic of the abolition of non-dom regime and the new regime that's been introduced in the UK. He dials in from the UK, and nice to have him here. We then have Adrian Sham. He's a partner in tax and global mobility services. He was dialing in from Singapore, which is again a very important jurisdiction for us as a group, and we will be talking about Singapore more in subsequent webinars. And then we got Frini, who's dialing in from Cyprus, which is increasingly becoming an important jurisdiction for global Indians and high net worth individuals, as well as global companies accessing Europe. And finally, we've got Michael Tobler. Michael's dialing in from Switzerland. He's a tax partner from the Swiss firm. And again, very many of you will know that that's an important jurisdiction as well. This team collectively represents the Global Indian Steering Group for all those key jurisdictions where we see increased mobility of Indians and their capital. And as a firm, we are probably unique insofar as addressing the market in this focused and coordinated way. UAE obviously is, and Dubai specifically, has become a popular destination for a number of high net worth individuals. So, 2024 was a transformational year actually for UAE. UAE continues to be the most attractive global destination for high net worth individuals, amongst that global Indians, USA, Italy being the other. Well, I'm dialing in from London, and UK seems to be getting more than its fair share of folks departing the UK, and that's for many reasons which we discussed last time. But again, one size doesn't fit all. Looking ahead to 2025, as I said, there's going to be even a greater surge, and this represents possibly the most significant wealth migration wave ever documented, and reflects obviously fundamental changes of how affluent individuals and families are approaching geographical areas and financial planning. Obviously, a lot of it is also affected by geopolitics, and that's something that we're seeing get even more complicated in the current scenario. So UAE has zero income tax, as you know. It's got a golden visa regime that came in and became popular during COVID. We got obviously lifestyle, strategic location that has access to both Europe and Asia, and it's obviously entrenched itself as a #1 destination. As far as Indians are concerned, again, this is based on latest embassy data. About 130,000 Indians have migrated to the UAE in a year, and that's again unprecedented, which I guess many of you who are dialing in from the UAE will know that everything is becoming more expensive in Dubai, and that's also one of the reflections. So with that, I want to kick this off. This is our second webinar. We will continue to present on everything that's relevant and topical for global Indians and their wealth, as well as bring more knowledge on key jurisdictions. As I said, possibly we'll talk about Cyprus and Singapore next, and then all of you will have access to the previous webinar through a QR code that we'll share at the end and in the recording, where you can access the presentations from previous times as well. So with that, I'm going to pass this over to Anuj, and I would urge everyone to make it as interactive as possible. There's Q&A at the end. We want to spare enough time for that. And if you could add those questions in the Q&A section, which you can see on the top part of your screens, and this will be sent privately to the speakers, who will then pick up the most relevant questions and answer them. So this has been recorded. So those that unfortunately haven't been able to make it, or those that you feel would like to hear more about what we are saying, please do forward those recordings to them. And I wish all of you the very best. I'll come back at the end of the presentation to summarize and say my thanks for your time and patience. So over to you, Anuj. Thank you very much.
Thanks, Akshay. Good afternoon and salam, everybody. I guess those were some very prominent and eminent numbers we all have been reading in the news. And if I take the liberty of saying this, either some of us are already included in those numbers or probably are comprehending whether the next decision of ours could include us in those numbers. I think before we dive into the core of today's session, which is the residency rules of UAE, I've been around for almost 12 years. I think I've always found it extremely intriguing to first understand the larger canvas under which things are happening step by step. I think from a UAE perspective, it's very important to understand how the country as a federal has marshaled its way into one of those countries which is becoming, or has become, and is increasingly becoming a country of choice for some or the other reason. It could be residency, it could be business connections, it could be some sort of presence, or it could simply be some comfort. If we move on to the next slide. Now, I think for me, it all started in a post-COVID scenario where the famous golden visa, I say it famous with a lot of responsibility. The visa rules, the entire immigration system of UAE was literally overhauled and continues to be a very vibrant regulatory body within the country. Not just golden visa, as recent as a few days back, there was a blue visa released for a certain category of people which fit into the certain conditions and economic scenarios. We have seen freelancers, entrepreneurs, investment-driven visas. So the old traditional mannerisms wherein one could look at a 2-year horizon to be in the UAE from an employment perspective, or one could look at a 51-49 joint venture. All these mega changes, both in terms of the ownership, bringing a sense of ownership from the international organizations, international individuals, trying to give them a rope and a platform to call UAE their second home or first home, as the case may be. This has kind of progressed into a magnanimous shift in the approach by the country, and then rolled into action and regulations being overhauled to suit the taste of the international audience. This also brought in a lot of self-permanency in terms of people looking beyond immediate or a temporary move to the Middle East, particularly to the UAE. Self-sponsorship has become to the center stage of why do I need to depend on an entity or a sponsor to be in the country? I can self-sponsor myself, and all conditions being met, your dependents can be sponsored. There are unemployment insurance-related drives which were mandated a few years ago, and those are seeing some benefits come through. So all in all, the entire ecosystem of how an individual could enter and base itself or rebase itself into UAE as its own, has brought about some major changes and overall an access to human capital. And as we've seen, capital follows human capital, and there came again a complete overhaul in the banking regulations, major shifts and upgrades from anti-money laundering perspective, the common reporting standards in FATCA being highly well governed, implemented. A lot of news and press has been put across on these topics as well. And while some of this might have meant that the banks are taking longer to open bank accounts and there's a particular due process being followed from a KYC perspective. On the other hand, there are also certain digital banks where for those who have Emirates IDs and a national card, literally from the comforts of your home or office or elsewhere, in minutes on an app, thanks to the digital optimization adopted by the UAE, you could literally open a bank account in minutes. And again, all this again leads to the sense of the country realizing the fact that how necessary it is to provide the comfort, to provide the right regulations, to implement things in a direction where not just the ease of doing business from a corporate perspective, but also the ease of setting up a domicile base in the country becomes more and more accessible to the foreign nationals. Of course, as we might be aware, a lot of tax-driven mandates have also been executed by various ministries, corporate tax being the latest one. And within corporate tax as well, there are specific rules, regulations, and comforts wherein whether it's the foundation structure, whether the trust structure, again, internationally well recognized, absorbed and imbibed by various other countries to suit their own requirements. And UAE has again done well with the help of the FTA and the Ministry of Finance to maneuver through these foundations and trust structures to make it more amenable, not just to the existing expat base or the existing business fraternity within the country, but increasingly make it welcoming for onboarding new investments, not just FDI, but also the wealth transition, which Akshay was referring to from a HNI or a ultra HNI perspective, is clearly on the top radar of these ministries. Now, while all of these have significantly contributed to create an ecosystem within which the residency rules then started to prevail, effective 1st of March 2023. Now, the interesting point is UAE was always sought after as a go-to place by many across the globe. Of course, the absence of personal taxes, various reasons which Akshay already mentioned, the comfort, the infrastructure, the proximity. So was there really a need to talk about residency and overhaul it in a way that it not only stitches to the international standards of residency rules, but also provides something over and above? It's not only driven by substance, but it also takes into account certain practical scenarios, which certain individuals, many of them might be on this call today, do find themselves. And UAE wanted to propose an intent to be one of the solutions to such gray situations. I think it's important to know that previously UAE's residency rules, which were in a way non-existent, were a very default position. It was more of a residual scenario where maybe an individual is not a resident of anywhere else, and then owing to the same global standards of 183 days, UAE would adopt the residency of this individual to be UAE residency. But the new rules, as we will speak about in the next few minutes, they go much beyond just the period of stay. They take into account the likelihood and the practical scenarios of what drives the affinity of UAE to become a country of investment, a country of maybe a real estate possession, a country where a businessman or an individual, a freelancer or an entrepreneur might consider spending more time than previously being considered. And all of these parameters together contribute today and from here on as to how you could not only access the tax residency of UAE as while you're seeking it, but at the same time how the federal tax authorities might trigger the residency rules as and when certain conditions are satisfied. If If we move to the next slide. Sorry, the slides are just coming up on the screen. The intent has been to talk about certain base case scenarios, certain key definitions, and certain key parameters, or the pillars as we call, to determine what constitutes a tax residency for an individual. Now, broadly speaking, there are three pockets in which you can place them. So, Ellen, if we could move to the next slide. Thank you. Now, the first category is probably the most black and white category. It's basically meaning to say that an individual considers UAE as its domicile. It has its center of financial interest, center of social interest, the family, all the nexus, all the assets, the kind of access to wealth or the banking relationships. Everything indicates and points out to one direction, that the center of the universe for this individual is UAE. And hence, there's no real reason to get into the number of days of stay. What typically would follow in this situation is just a conclusion that if this has been happening for a while, then there is no doubt and there's no question that this individual habitually resides in UAE. There's never an option, and hence the question is not how many days you were in UAE in a particular year. The question is quite the opposite, that were you by chance outside UAE for a particular period, triggering a potential residency in a non-UAE jurisdiction. But this is, in a way, a very standard, plain vanilla, simple example, and hence probably too ideal for real life. Moving to the next category, and this is where UAE has adopted the international benchmark of 183 days. Again, when you talk about 183 days, that test itself, which is typically driven by a kind of an immigration record kept through the airports. There's no other condition here to be really looked upon. This is purely driven by the state, and many of us are already attuned to how this definition and the test works. So UAE has done nothing different, literally imbibing the same principles. But then come the third scenario, which probably is the most interesting and intriguing scenario. This is where there are kind of three main sub-scenarios. Now, this typically triggers in cases where, say, you are a UAE citizen or a UAE national. Yes, you're part of the home crowd, and the Federal Tax Authority or the Ministry of Finance didn't really want to have any ominous conditions attached to the scenarios where the person is already a citizen of the country. And hence, for that particular individual, just satisfying this 90-day test is enough, given that he is already part of the social and the economic infrastructure. There's not much to look into it. Extending this then to the neighborhood, so the GCC nationals. Again, we have seen instances, and maybe Oman is a good example to give, where certain announcements were made regarding a possible introduction of personal income tax in Oman. Now, if an Omani national ends up spending 90 plus days within UAE, then again, such individuals can start taking the benefit, all other conditions being satisfied. So again, UAE nationals and then GCC nationals, these two form a very strong pedigree of case in point where the 90-day test rules do become beneficial and work in their scenario. And many of these individuals are not attempting, typically from our practical experience, to access any double tax treaty, which, by the way, till recent times weren't even existing within the GCC. It was more to do with the domestic laws. And hence, in common parlance, this 90-day test is more attuned towards determining the tax residency from the angle of UAE unilaterally. What I mean is it's more to do with the domestic tax regime of UAE would consider these situations of 90-day plus tests to be considered as residents. The minute one would like to explore and avail bilateral agreements, double tax avoidance agreements, present or be willing for the residency to be tested in non-UAE jurisdictions, then of course the interplay with the other country rules, the previous track records, and how you transition from the residency in one country to the other, all of them become equally relevant and part of the equation in order to finally determine the residency. The third subcategory within the 90-day test is to deal with non-GCC nationals, non-UAE citizens, people like many of us on the call who either by dint of their employment, again, there's a lot of leeway and liberal approach given whether it's a limited contract, unlimited contract, whether it's a full-time employment or a part-time, whether you set up a business and become a director, or you have a long-term lease for a house which you are renting, going with the intent of the fact that while you are spending 90 days in UAE, the overall intent is not to restrict yourself to 90 days, but by dint of executing a long-term lease or owning an apartment, having a full-time or a part-time contract, the overall intent of the individual, again, substance over form approach prevailing, is to spend as much time because these are the economic commitments you've given within the country. Now, it's easy to say that there are these three categories, and even if we ignore the first one, which is too ideal, practically we've seen many of us as individuals might be in a transition phase where you might begin the journey of looking at UAE residency and falling within the 90-day test, adding onto it the contours of employment or business and stitching together your residency, etc. Again, I see a lot of thinking being given that only long-term lease contracts are being considered from a permanent place of residency perspective because as some of us might know, in UAE, there are a whole host of options, as with many other things. You will have individuals staying in, very practically speaking, hotel apartments. You might have individuals who are leasing or renting a place of what they call as a place of their residence on a monthly or a quarterly basis. None of these substandard, if I can call them, commitments on the economic front, on their expense profile, on the income generating profile, would be respected from a 90-day window. And hence, it's a good balance while allowing the 90-day presence triggering a potential tax residency, but at the same time, the combination of either a commerce or a business connection with UAE and coupled with a home, which you can call and you would like to spend more time there or have a commitment over a 12-month period. I think that practically brings in the substance over form approach, which, by the way, UAE committed to when all these new regs, new governance was imbibed into the mainstream legal proceedings. Now, if we move to the next slide, this is an oversimplified example of how one would go about taking a decision. But as I said, unless you are on the far left of the slide and the 183 days are unconditionally met, anywhere else, these conditions would tend to trigger a yes, no, or a maybe. And again, while UAE would stand its ground of what UAE as a federal considers a 90-day period, which, by the way, even part of the day, even an hour of a day, is kind of treated as a full day when you compute these days. And we've seen scenarios where potentially even an additional 1 hour of another day does make a sea of a difference in someone's residency and a potential tax exposure. One would have to equally respect the non-UAE tax authorities as to how they would tend to take this on their pallet. Would a tax residency certificate issued by a UAE tax authority suffice? Typically, we have seen more acceptability and more reliance on 183 days the minute the situation for which a particular residency question is being answered is more than one country's question, if it's a bilateral situation or a multilateral situation. Of course, there are 130 plus tax treaties which UAE has, and many of them carry the tiebreaker test, and we'll get into those discussions in some time. But this decision tree helps to resolve a very base case situation of where a particular individual falls. And then what should be triggered is how much of a backup support, how much of living the life which you want to present to the tax authorities is actually possible by dint of your business, commerce, presence, travel plans, etc. So there are a lot of enablers which are on the offing. It's extremely important to have a narrative which is built on strong grounds, which are practically implementable, and secondly, they are sustainable over a period of time, because as we speak, residency is probably one of the most territorial conversations today from a tax perspective, and a lot of triggers, not just for the individuals, but also for a business or a company which this individual might be attached to, do find their linking to the base case residency status. Now, if I was to use a very good example, is you might be an individual who spends 200 plus days in UAE, but if you continue to have a major exposure, whether by dint of having a permanent home in another country or a family nexus in another country, then while you are at the threshold of 183 plus days, and UAE might be willing to consider you as a UAE tax resident, that does not automatically disregard or obviate or supersede the residency which you might have created elsewhere because of certain rules of that non-UAE jurisdiction being triggered. And these dual residency rules, as probably we will know at the end of this session, are definitely ones which are worth avoiding. Moving on to the next slide. Now, on this slide, we've tried to give a quick overview of what the procedures are to get a tax residency certificate. The Imara tax portal is the one whole and sole online portal which the FTA has built and continues to build for almost all tax-related communications, including seeking the tax residency certificate. There are very clear documents which are available either through a regulatory body or through a corporate organization you might be connected with. And these documents are a must-have when it comes to seeking the tax residency certificate online. It's important to note that, as I mentioned earlier, the tax residency rules came into play on 1st March 2023. And as we speak, either you can get a tax residency certificate for the current tax period or your previous tax period. And when I say the previous tax period, it has to be less than 12 months. One cannot go back in time and try and seek a tax residency certificate for, say, financial year 22. That's not something which UAE would encourage. Now, at the same time, we've seen situations where the home country might have a particular financial year, while in the UAE, in absence of any personal taxes, there is no real fiscal year or a tax year connected to an individual. Hence, again, more than the procedure to follow, I think it's the content and the flow of information as to what really goes in, which will make it easier or otherwise for you to explain your situation to the FTA authorities. We haven't seen a potential rejection of any TRC in our personal experience, but at the same time, certain things, if not done right, certain informations, if not published in the right perspective, can make these relatively easier processes go sideways. And then typically also we've seen this residency rules, because of the newness and because of certain gray areas still prevailing, they tend to come up already at a point in time where the basic reason of now nailing down your residency has already peaked to becoming super urgent. Hence, I think planning ahead and ensuring that not just the due procedure is followed, but each tab to the information and the connectivity of dots to various other documents is well structured. Moving to the next slide. Now, I think I'll just maybe, in the interest of time, spend 2 minutes on the corporate tax law in UAE. The name can be quite misleading. It says it has a corporate in its name, but it equally applies to natural persons, as we call it technically, or to individuals. It will where, in absence of any personal tax, you might be an individual who's trying to seek the residency for various reasons, for various right reasons. But at the same time, there could be very well a scenario now and increasingly in the near future where the FTA is trying to apply a certain provision of the residency rules and seek taxes on individuals, which otherwise should have voluntarily submitted a tax return and adhere to the corporate tax law. And here, I think two cases in point are particularly interesting. The global and the international thinking around permanent establishment is something which even UAE has subscribed to. Now, if you are an individual and you have considered your individual scenario on a standalone basis, and whether under a 90-day or 183-day period determined and got the blessings of the FTA through the TRC, and you're a tax resident of UAE, I think from that point in time, if you are also an individual who's a director or a C-suite individual or somewhere connected to certain corporate structures, I think there is a clear requirement to assess whether by dint of your residency, is there a possible exposure to the corporate structure, either through the permanent establishment argument, with or without a treaty situation. And secondly, the place of effective management rules, which means if you are again an individual who is the strategic brain behind any corporate decisions, then through the POEM mechanism, you could potentially trigger another taxable nexus, which could bring not just your residency to bear into the UAE's federal reach, but also expose certain levels of your corporate structure, if not a single entity, to having access to the UAE Federal Tax Authority. And all of this could open tax registrations, tax filings, record keepings, so on and so forth. Having said that, these are more relevant where there are more than just passive income being generated, which, for example, if you move to the next slide, there are a lot of leeways and giveaways given when individuals have and continue to invest into the real estate, provided there is no license structure or a corporate structure being used for these kind of investments. Any direct investment by an individual generating real estate income from UAE has been given a clean sheet of not being subject to any kind of taxes. And of course, this helps to further enlarge the list of no wealth tax, no withholding tax, no estate, no gift tax, none of these rules and taxes which are prevalent in some other parts are something which today form part of the UAE's legal framework. I think if we move to the next slide, with that, I'd like to hand over to my fellow colleague, Nick.
Hello all. Thanks for that, Anuj, and please do keep adding questions to the Q&A. So we've got some great questions across, not just Dubai specific, but across jurisdictions. So we've got some interacting with Dubai and India as well. So to keep them coming, what we just want to do is just cover off a bit about the interaction with some of the specific jurisdictions that we've got panel experts here today on. Maybe I'll kick off, given I'm from the UK side, and here we're just talking about that interaction when one might be resident in both jurisdictions and how one defines that. And as Anuj says, we have treaties, the UAE has treaties with these jurisdictions, and one has to run through those. I think the key thing from a UK standpoint, though, is because the UK residency rules are very prescriptive, typically if someone's looking to go to the UAE and typically Dubai, then one is looking to cease UK residence, and they can do that because of the rules being quite prescriptive. And from a kind of tax efficiency point of view, that's likely to give them less headache and more comfort than trying to rely on the treaty when you have to then decide as to where one's habitual abode is, where's one's central vital interests. So it's rare in my experience that one has to kind of get into the treaty, because you start to add an element of risk to that if you need to rely on some of these treaty rules. So but we are seeing, as I actually said at the start, a big movement of wealth outside of the UK, and Dubai, UAE is incredibly popular for that. So we're doing a lot of work at the moment on how to leave the UK, how to enter Dubai, and how to set oneself up and their family efficiently as possible, not just taking into account Anuja's advice, but the UK side as well. Michael, maybe over to you on the Swiss.
Thank you. From the Swiss side, that the UAE tax residency is accepted. The Swiss tax authorities, they apply a substance over form approach. So we seek to clarify the living arrangements of family members involved. For instance, we want to understand that the, for example, married couple is living separately. We want to understand where family members, children are residing, studying, potentially in different jurisdictions, and so on. And overall, Switzerland is an appealing OECD compliant jurisdictions. We also offer lump sum taxation for individuals and low tax rates and much more.
Thanks, Michael. Yeah, we've seen quite a few from the UK looking at the various cantons in Switzerland if they find Dubai too hot a climate for themselves. Adrian?
Hi, I'm from Singapore, and I guess Singapore is a country which is hotly compared to against UAE, probably because of the beneficial tax rates compared to some of the other countries. We have similar tests in Singapore, which looks at the quantitative, so 183-day tests, as well as qualitative, so family and your residential ties to Singapore. When it comes to the treaty, we don't really approach the treaty as much with UAE, probably because Singapore is not a worldwide taxation system. We really focus on the source of the income, and so you don't usually have to rely on the treaty as much, but we do have a treaty with UAE, so it is there as a backup plan. And we come across many clients who do compare Singapore and UAE, and it's not really a one size fits all. It really depends on what you're trying to achieve. We have, similar to UAE, good finance, education, health, and taxes. Maybe not as cheap as UAE from a tax perspective, but still very good tax rate. So yeah, Singapore is definitely worth considering as well. Back to you, Nick.
Thanks. Pallavi, from an Indian standpoint?
I think from an Indian standpoint, it's, the UAE TRC is very relevant because India introduced in 2020 a concept called deemed residency, where essentially they said that, people of Indian origin holding an Indian passport who are not paying tax in any country can be deemed to be resident in India. And, way back when this happened, it created quite a furor because, there's a very huge population from India that actually works in the UAE. And we all know that, UAE doesn't have personal taxation. So what has been happening over the years is that India does call for substantial proof on, what's your economic presence in the UAE to absolve you from being considered a deemed resident in India. And of course, there are now clarifications that have also been brought out to say that UAE does have tax. The rate of tax is 0, and hence, a TRC always helps. Again, because there isn't any tax on individuals in the UAE, it's not as if the India-UAE treaty is, tapped into very often. But high net worth individuals do utilize the treaty effectively, especially for those who are earning dividend income from India. Just to give you an example, if one was to get dividends as an Indian resident, you would probably end up paying tax at 36% on that dividend income. But if you are a resident of UAE and you have a valid TRC, those dividends can be available to you with a withholding tax of 10%. So, this is somewhere where the TRC comes in very handy for people to tap into the double tax avoidance agreement and set yourself up with a very efficient structure from a tax perspective. So I guess I would imagine these are two things, from where I think it's very relevant from Indian perspective that there is a robust system around TRC that's sort of evolving in the UAE.
Thank you for that. I've got a couple of questions actually on the TRC with India, but we'll come back to those after Srini. Maybe we can just cover off Cyprus if you wouldn't mind.
Thank you. So on the Cyprus side, similar provisions for Cypriot taking up by UAE tax residency apply, spending no more than 183 days in Cyprus, and definitely the tax residency certificate would be applicable for the local authorities. It's important to also mention that the double tax treaty between Cyprus and the UAE provides for very favorable provisions in terms of dividend income from Cyprus onto Dubai and the other way around with no withholding tax applicable. And a few points to note on Cyprus, because we've seen Cyprus and UAE use on common structures in case where UAE entities would like to enter into the EU. Cyprus being an EU country, this can cater very well with a very good top-end talent into Cyprus, a top-end migration regime with the EU Blue Card that enables non-EU people to travel for business within the EU. Very good tax incentives that can lower corporate tax as low as 2.5%. A multicultural Mediterranean lifestyle that is very appealing to individuals. Very close proximity to countries and time zones like the UAE, London, Dubai, make Cyprus a place to be. And also last to mention the non-DOMS regime that Cyprus operates under the 60-day rule that can intertwine very well as a personal base for individuals who want to split their time between jurisdictions that we are talking at the moment. Thank you.
Thank you, Frini. Yeah, I certainly enjoyed going to Cyprus myself. Nicer weather than we have in the UK. So I'm going to crack on and get to some of these questions. So apologies, I'm going to try and read through them while I get to them. Sandeep was incredibly keen with a question within the first couple of minutes, and maybe this one actually I'm interested in, Anuj. So we've got all the kind of the advent of the CT, VAT, other indirect taxes. What about personal taxes? So we know in the UK we aren't short of various personal taxes, but what's the future hold for Dubai and in the UAE though?
Yeah, on a lighter note, we all probably know that the casinos are yet to open in the Emirate of Ras Al Khaimah, but this is one question which has been waged more than any other. So I think I'll answer it in two ways. In one sense, personal income tax is the only thing which is now remaining to solve or to create the whole pie chart for a tax regime. Having said that, if I look at the texture of the UAE population, it's majorly expats. And with all these residency rules, golden visa rules, while it helps to solve a lot of immigration issues, we are not in a situation where the education or the healthcare is state-sponsored. And hence, a lot of other macroeconomic changes need to happen before a personal income tax is sought after. Also, with Pillar 2 coming into UAE starting this year, we have a headroom of 15% corporate tax. We've seen KSA have a 15% VAT. We are still at 5%, thankfully. So there's some headroom there. And so these avenues might, in my personal view, be explored further before a personal tax can be planted in.
Thanks, Anuj. And just maybe picking up on the tax residency certificates, a couple of questions to Anuj and then Pallavi from an Indian standpoint. So with the UAE certificates, can we seek them for the future, Anuj, for future periods?
No, the small answer is no. Either it's YTD or the years already passed, but not earlier than 12 months.
Okay, great. And then Nisha, question from yourself. Does the 90-day stay and other conditions fulfilled entitle you to a TRC, which giving you access to the tax treaties? And if not, we presume it seals the position that there is no deemed residence in India. Maybe that's a kind of a bit of Anuj, and then maybe Pallavi for a bit of an input to that one, if you don't mind.
Yeah, I think I'll again reiterate the 90-day tax residency certificate does not come with a key to access the tax treaties, and hence you don't have the treaty protection with the 90-day condition being satisfied. Over to you, Pallavi.
I think you've said it, Anuj. There will be no treaty protection with a 90-day TRC. So one has to look for a 183-day TRC. And as I said, if one for any reason one can't get a TRC, then when it comes to deemed residency, they also look at substantial economic presence that you have in the UAE, which could be things like Anuj spoke about, whether you have a place of residence, you have an employment contract, your past history of how long you stayed. But a 90-day TRC will not help in itself.
Thank you, Pallavi. Another question about, I suppose, the residency regime more generally, Anuj. Is that settled? Can people have certainty? I suppose people get spooked by various changes in other jurisdictions, UK being one. Can they kind of plan with certainty that that's the residency regime for now in the immediate future?
I think immediate future, yes. Having said that, we've seen since the time taxes have been rolled out, particularly in the last 2 years, all the ministries and the FTA, they've been extremely open to new ideas, new suggestions, practical situations being kind of catered to. So I would tend to think that there could be certain clarifications, certain particular clarifications. For example, what document may not be required, just to make it not too onerous and make it more of an enabler to get the residency rules benefited. But otherwise, I think the major contours will still remain the same.
Thanks, Anuj. Pallavi, coming to you, if I may. Obviously, we've got the LRS limits in India and individuals looking at acquiring assets in Dubai, UAE. So maybe buying property, do they buy the property in a corporate structure? Is that how one should be structuring that type of investment with the LRS?
Okay, so let me just start off by saying LRS is a limit that's available to all residents for remitting up to $250,000 a year overseas. This limit can be used for buying real estate in your individual capacity. But if one has to look at, buying real estate in a corporate structure, then you've got to be very careful because India is a very regulated economy. We have capital account restrictions, and you cannot use a corporate structure for buying real estate. So that if you do go the corporate structure route, then you need to have an operating business in that corporate structure, and the purchase of property has to be incidental to the business. So it could be for a guest house or for an office or for the residence of the directors, but it has to be incidental to the business. So you can't really set up a corporate structure only for buying real estate.
Okay, thanks, Pallavi. What about the new Indian income tax bill? Are there any changes there that need to kind of be borne in mind when we're talking about kind of residency across jurisdictions here?
No, there's no change there. There's nothing. Okay. I mean, we're still going to look at residency the same way. So nothing's really changed from that perspective.
Okay. Thank you, Pallavi. I'm just scrolling through some of these other questions. There's some interactions with the UK, questions around the interactions between the UK and the UAE, and where that might be taxed. From across the UK and the UAE. So from a UK standpoint, it's about this residency. One needs to have ceased residency, and can't be a split year effectively for it to avoid any UK tax on any dividends from the business. And then from a Dubai standpoint, however, if one is if they've got a golden visa in Dubai, Anuj, they've got a house there and a main residence, and then paying themselves dividends, is that typically going to be taxed in Dubai?
Yeah, I think maybe I'll take this opportunity to clarify this. A golden visa by itself has no bearing on any individual's residency. It's more of an immigration tool. It's definitely a good start, and I think the other ingredients which were mentioned in the question sound positive. Having said that, I think it's better to get a very specific advice. Dividend income is more of a passive income, not a commercial revenue source. But happy to look at it offline and try and have a conversation. But golden visa is not equivalent of any residency.
Thanks, Anuj. And maybe just in the interest of time, maybe I'll take this as the last question. Pallavi, with the tax residency certificates, do NRIs need to get them manually? I can't remember. You might have asked that while I've been scrolling questions, but that's the question.
Actually, you do. So like Anuj mentioned, you always get a tax residency certificate for a period. And it's not in the future. I think you were asking that can one get one for the future? You can't, because it's actually based on the actual number of days you've been in a particular jurisdiction. So yes, if somebody has to access the treaty on an annual basis, then yes, they will need an annual TRC to be presented to the Indian authorities. And if you look at a TRC as well, it's always for a specific period, and that's the period that it's valid for. So yes, it would not be a one-time, but a recurring exercise. Every time, somebody has to access the treaty to be able to repatriate any income out of India.
Okay,
So yes,
great.
pretty much annuity business for Anuj.
Well, how long is it? From a practicality standpoint? So someone says, right, I need one for my affairs, so I'm applying for one. How long would it typically take in your jurisdictions? We are seeing in the UK, it's normally taking less than a month. I think we're averaging around 25 days for more recent TRCs. How long does that process take for you?
In India, officially, it's supposed to be within 2 to 4 weeks. But it actually depends, because it starts off as an online process where you fill up a form, but then eventually you have to go to your assessing officer. So sometimes it can take longer, but officially between 2 to 4 weeks, you should be able to get a TRC in India.
Right.
Yes, and not to sound competitive, but that's typically the ballpark. The quickest one we've got is in 14 working days, and yeah, it's always working days from the regulator. And just to round the puzzle on the period again, I think probably that's the reason why even in the UAE regulation it says 12-month period. You can choose the period. It could be April to March if it is in the Indian context. And Nick, as you mentioned, there's no split year in UK, so it can be for the full calendar year for a UK situation. But yeah, in UAE, no personal taxes, so you can choose any period.
Great. Thank you, everyone, for their questions. Really appreciate everyone's engagement in the discussion today. And I'm going to pass back to Akshay to finish off.
Yeah. Thank you, Anuj, for an excellent presentation, and Nick for running the questions panel. I'm sure we haven't been able to get through everybody as far as the questions are concerned. So we won't forget you. Somebody will be in touch with your specific question and hopefully clarify that. So please bear with us. But anyway, just to summarize, clearly UAE is being recognized as an important jurisdiction, and the enabler, the regulators are enabling that. It is getting easier by the day, and we are there to support and help. One does also hear another noise, and this is something that I've learned, especially those that are moving from one jurisdiction to the other. There's no one size fit all. There's no cookie cutter approach to this. It's important to get a long-term advice, considering one's financial affairs and milestones when events may happen, capital events, income, obviously personal events, children, school, education. And therefore, it's important to see this through an entire spectrum of one's lifestyle and financial milestones. And therefore, we as a firm provide advice across all jurisdictions rather than just one. The UAE firm in Grant Thornton is certainly a very relevant and important professional services outfit. It's been there for decades. We have excellent full service offering, tax being obviously one of them, personal tax being another. So if at all you are in Dubai at any point, please reach out to me, to Anuj, and we'd love to host you at our offices in Dubai, and discuss more specifically your individual affairs. So as I said, thank you very much. Thank you to my fellow panelists for dialing in from all over the world. And thank you for your patience. As I mentioned, you have this QR code where our Global Indian landing pages, past webinars and recordings are available. This webinar recording will also be available on that page for you to download and forward and review at your own leisure. But with that, let me thank everyone again for their time, and have a wonderful day, evening, night ahead. Thank you.